first, what's your view on both these two?
Good afternoon, Nigel. Overall, what we are seeing in ITC has been the stock where we have been receiving a lot of queries also, because this has been the stock which has not participated much in the rally that we have seen post March 2020. Nevertheless, the stock is in an uptrend. We have seen some good move from 205 to 240 levels. From there, we are correcting over past few days, but I think it is best to hold the stock at least over short term. We can expect it to go towards the target of around 230 from short term perspective. And from long term perspective, if he wants to hold the stock, I think there is a possibility we might start seeing some rotational buying out of the banking sector and into the FMCG, which will benefit ITC. And if we look at it, IT has been the flavor for quite some time. HCL Tech has performed fabulously well. Short term, yes, we have seen some kind of a correction, but one can hold on to HCL Tech with a stop loss of 890, expecting a target of 1100. And once that level is crossed, I think momentum can start picking up here. So hold on to this stock from medium to long term perspective as well.
Okay, the next query comes in from Dilip Was 18.
As far as LT Food is concerned, if you look at that stock chart over the past 6 to 8 months, where we can see many of the stocks have rallied by nearly 20, 30, 40% to be conservative. LT Food has not done anything. So there is a huge opportunity lost and the chart looks weak. So it is best to get out of LT Foods, not to stay there, because you can't really expect much to be happening from that stock. From Bombay Dyeing perspective, from the real estate play, if you look at that, then I have seen some decent correction from this stock from 85 level back to the 70 and struggling around that. So instead of Bombay Dyeing, I'll prefer going with Godrej Properties. That stock has started outperforming, showing some kind of a very strong rally that we have already seen. So any dips in Godrej Properties can be used as a buying opportunity. So best to be out from Bombay Dyeing as of now. Trident has continued to do well. We have seen very sharp rise from the levels of 10 to the rise of 17, post which we are seeing a possible wave 4 consolidation. I'm expecting it is going to go back towards that 16 level, which is wave 5. So hold on Trident for now. Place a strict stop loss at 12.50. Expect a target of 16 on the upside for Trident. And as far as TV18, it is consolidating for some time, but he can hold on since we have seen a good bounce back from the lows of 28. So hold with a stop loss of 28 and expect a target of around 32 levels on this stock.
Got it. Okay. All right. So
Invested for higher targets?
As of now, the entire infra space and especially the cement sector has done exceptionally well. Ultratech Cement has shown a very sharp rise from the lows of 5,400 towards somewhere around 6,500 odd levels, and consolidating around that zone near the highs itself. So that's a very significant sign that despite of such a steep rise, it's just doing a time correction and not a price correction. So my take is hold on over here and continue to ride this uptrend. It's not very often we get such kind of fabulous moves on the stock specific movement that we are seeing right now. So hold on to Ultratech Cement. Maybe 7,000 is the level where you can look forward for partial profit booking and then continue to ride using a trailing stop loss method. On the downside, 6,000 can be a very important stop loss that you can keep on right now.
Okay, Parthiv, your take, Ultratech Cement?